Hey, it's Clay at claytrader.com. This is my top 10 stocks as we head into Monday, September 11th. This will be a technical analysis breakdown. So if you're someone that uses charts within your trading, or maybe just interested in learning more about charts and how they can be used as a tool to help make good decisions as a trader, this will be a video for you. A couple of quick clarifications. First off, the candlestick that you see there will be moving around. That is because the market's still open for a small amount of time, but I like to do these videos when the market is still open because sometimes we can capture some really interesting late day price movement. And then second, I'll be using the 30-minute time frame, meaning each one of these candlesticks here represents 30 minutes worth of time. So stock number one here, BIOC, very big mover this morning and then did pull back, but this is where things get interesting because at this point in the journey, it's always a question of, is this the beginning of the end? Is this going to be one of these things where the price just absolutely collapses to the downside? And no, it was not one of those situations. And if you've traded long enough, then I'm sure you've seen those situations where you do get the gap up and then the price just absolutely collapses. But that did not happen here. The price at least started to go sideways. Now, let me be very clear that and I wish I could say trading was this easy, just because the price has started to go sideways here around this $1.25 mark does not mean for sure guaranteed that the pullback is over and that for sure guaranteed this thing is getting ready to curl back upwards. My point here is that does it become a lot more plausible at this point that maybe just maybe this downwards move is over and that this thing is now getting ready to curl back up? That is a very valid question to be throwing out there, and that's what a watch list is all about: finding unique, finding interesting situations, not rushing out and randomly buying stuff, but observing and watching. So if you like to play these pullback plays that start to go sideways and signal potential consolidation period, which is symbolizing a very near to be move back upwards, then definitely keep an eye on this one. Next one, AXLA, and what a monster today. This will mean a bit more to those of you that watched the previous watch list video I did where I talked about this pattern here, but you can see this general area got the breakout and then just has absolutely had an absolutely fantastic day. So I'll go ahead and get rid of these lines down here as they serve their purpose for now, and new updates need to be made. Well, the newest updates is just going to be what I'd consider the newest kind of pullback and potential support area, and that sits down there at the 78-cent mark. So let me change that to represent more of those, so more so the support. And what's interesting about that, and not saying this will occur, but if the price does pull back to that area, in all actuality, what you would have is a downwards channel here, sure, but what you'd have before that would be this big move here. So you'd have a nice bull flag pattern. Once more, I'm not saying a bull flag pattern will occur, but if the price does pull back to that 78-cent mark, then you could be looking at a very, very nice classic textbook bull flag pattern. As far as the areas of resistance are concerned, nothing fancy at all right now. Literally just a question of, okay, well, where did the party finally stop today? And that was right up there at that level of $1.07. So $1.07 will be that main battleground moving forward for that very simplistic logic. But anyway you look at it, monster movement. And for those of you that have been tracking these and playing these breakouts, a big congratulations headed into the weekend. Next, NKLA. And this is an interesting situation here. So let me just get this drawn into play, and then we can go from there. So we have this area of support right there. Again, let me change that to green to represent the support. And then we also have an area of resistance right here. And this would be what I'd call a little miniature falling wedge pattern. Now, I do fully respect if you're like, no, Clay, I think you're trying to fit a square peg through a round hole. That's not a falling wedge. There we go. And I can respect that, but I hope we can at least find middle ground that you can at least see where I'm coming from. So is this like a beautiful, beautiful falling wedge? It's not, but is it one that I think at least makes sense? In my opinion, absolutely. And a falling wedge is actually a bullish pattern. And once again, same general idea of these other ones where, yes, it was nasty this morning, but ever since there has just kind of fallen in this tight little range. So all of that is just my long way of saying we get to ask that question again. Is this, downwards movement? Are the sellers finally done? And if so, is that going to prompt some sort of move back to the upside? Nobody knows the future, but as far as is that a plausible, is that a reasonable scenario moving forward? In my opinion, absolutely. So if you like to play this price range of stocks down below $1, you like falling wedges, certainly keep an eye on it. Next one, CGC, and this had a very nice move. And again, this will mean a little bit more to those of you that watched the previous one, but if you did, talked about this 83-cent mark over the past couple of days as being a key area of resistance. But you can see here, price did a good job of breaking above it, and then a classic example of that resistance then acting as support right there. So this will be the first update, which is just based on a foundation Rule 1 levels of resistance are broken and closed above. You want to see them act as support. So there we go. If there are any sort of pullbacks, 83 cents going to be that newest area of support that you'd like to see hold. With that being said, that is an ideal level. I'm going to say, Clay, what would make this chart look the absolute best moving forward? That would be if the price can stay above 83 cents. But from the grand scheme of things, as you can see here, now that I squeeze things down, as long as the price stays above the purple line there, the 50-period moving average, keyword there being moving. So as time goes by, that line is going to move itself higher and higher. So it's basically like a trend line that's drawing itself for you. So as long as the price remains above the quote-unquote trend line over the bigger picture of things, then overall the trend is perfectly fine. But again, if the price can stay above 83 cents, that would definitely be best case scenario. But as long as this thing keeps on putting in those higher highs and higher lows, that's what matters most. Next one here, AMC. I should have put this at a different location because we have ourselves another falling wedge. But you remember me just talking about the falling wedge, so I'm going to go through this a little quicker to respect your time and not say everything all over again. So we have that bottom part of the pattern there. And then as far as the resistance, we have that right there. And I would definitely consider this a more traditional falling wedge pattern here. But it goes along with the general premise boiled into this one of a very popular stock, a cult stock. And I've been tracking it and will continue to track it because it's just a matter of time before one of these get a respectable bounce to the upside. Now, when I say respectable bounce, I just mean from a trading standpoint. And from a trading standpoint, this thing could go here and then totally crash. But that distance right there, from a trader standpoint, from that right there, I mean, that would be plenty of wiggle room to pull out some profit. So when I say bounce, I don't mean that I'm looking for it to reverse back to where it was. I'm just looking for a tradable bounce. And when you have this falling wedge pattern here on a cult-like stock, worth at least keeping an eye on. Real quick, want to take a break and personally invite you to get signed up for this free live online class that I'm offering next week. So if you've been enjoying what you've seen and you want to learn more about this tool, how it can and should be used to build consistency and manage risk, then definitely get signed up for the free live class. If you're watching on YouTube, there's a link down in the description box, or if you're watching at my site, there's an area right there on the webpage that you can click to get signed up. So like I said, if you've been enjoying, then definitely get signed up for the free live class. Next is VERB, and overall, a pretty rough looking chart right now, given the fact that the price came up nicely and then is now rolled back over. And then as I speak, you can see right now, this red candle is just getting larger and larger to the downside. But that in and of itself does create an interesting situation because let's see if the price can get a bit more ugly and then come down to this $1.50 mark, which going back through the history of things has proven to be a very worthwhile and interesting level. So let me squeeze that over. So let's take a look at things. You can see last time the price was down there, found some support, nice bounce. Again, found some support, nice bounce. So if the price comes down here, that's the question. Does history repeat itself? Do you get another nice bounce in the upwards direction? Of course, that's not guaranteed to happen, but it's certainly plausible given that it's happened 2 times before. So if you like to keep the eyes on these sorts of potential situations, then keep an eye on VERB. Next one, TSLA Tesla. And in all actuality, from a trading standpoint, perfectly fine. But if you're somebody that gets motion sick, you probably are throwing up a lot this week because this thing truly all over the place. I mean, up and then down, up, pretty nasty move back down, a little miniature up and then down. And then today, another big move up and then a little bit down here. So really just choppy all in all over the place. And given that it's Friday, I just want to establish some kind of overarching trend lines that I think a lot of people will be watching next week, myself included. The first key level being this trend line right here of resistance, and nothing fancy here, just connecting a couple of the key overarching levels. Let me get a little more exact. There we go. And then as far as the support standpoint, in this situation, you probably don't even need a trend line because you could just use that pink line there, which is the 200-period moving average. But I'll just go ahead and, map out that one. And you can, if you just want to use that pink line there, that works too. But I think this is really the best way to visualize this, at least for me, because at some point, this thing can continue to chop back and forth, but this is going to run out of room. And then it becomes a question of, well, who's ultimately going to win out? Are the bulls going to win out with a break to the upside, or the bear is going to win with a break to the downside? But that's what, this wedge is essentially representing. But as far as traders are concerned, yeah, this is like a little playground in here. You could be buying and selling as it goes up and down. But yeah, from an overall standpoint, it was definitely a very choppy week. And a lot of you are probably taking some motion sickness medicine. Next one here, MARA, a bad joke. Motion sickness medicine. Dramamine, is that what I'm trying to say? Anyways, but as for this one, MARA, one of these crypto stocks, very, very nasty move here. But the reason why I'm doing this is very interesting dynamic right now. You can see late day, this thing has started to come to life. Now, to be fair, this is technically, just a little miniature bear flag pattern. But With that being said, that is a two-sided coin because, I mean, maybe this is the start of something bigger where the price continues to grind higher and higher. So that's the big question here is this the start of something bigger to the upside? Think about that question. You can't ask that question unless something worthwhile has happened in the first place. And in this situation, yeah, we did get something that has happened. So is this the start of something bigger? Let's see what happens. So if you like to play these stocks that get beat down and now we're starting to show some signs of life, and then you can ask that question of maybe this is the start of a much bigger bounce, keep an eye on it. Next one here, AAPL and Apple. I'm sure you've heard of this one, and it's been in the news quite a bit with all the China stuff. And technically speaking, try to show some signs of life today, but cannot quite get through a very important level from a technical standpoint, which is that pink line there, the famous 200 period moving average. And with the price now below it, you'd expect it to act as resistance, and that's exactly what happened here. So nice bounce, nice bounce, nice bounce, and then right there, tried a nice bounce again, but rejected. So it's all still in play. I mean, it's not like the price completely rolled back over, which brings about the next key level is, you don't want to see this thing roll back over. Okay, fine. How are you, quote unquote, defining roll back over? Right there at 175.65, because if the price does come back to that level and then breaks down through it, all of a sudden you have the price having gone right back to where it was. I mean, that's not exactly a sign of true power where a price rolls back over and goes back to where it all started. But also, to be fair, nothing can go just straight up either. So you want to see some progress, and the quote-unquote progress point would be, again, 175.65, because if the price goes down there, you'd have a low, you'd have that low, and then you picture those as stair steps, and you would still have progress in the upwards direction. Next one, TQQQ, which is an ETF that measures the NASDAQ market. So if you believe the NASDAQ market will rise, this one will also rise. Very popular ETF because it allows you access at a much lower price point. But we have a very straightforward way out to approach this. So we're going to apply the KISS method here. Keep it simple, stupid. And maybe you already see where I'm headed with this. But thanks to our moving averages, we have two lines that you got to think a lot of people will be watching. And it's always good when you can find levels that you think a lot of other people are watching, because then you can start to get some of those self-fulfilling prophecies. And while nothing is guaranteed, things become a whole lot more rational in regards, because, like I said, even if you just want to say, well, that only happens because it's a self-fulfilling prophecy. Okay, fine, fair enough. But if self-fulfilling prophecies exist, wouldn't you want to know what those self-fulfilling prophecies are supposed to be? So you're going to have a bunch of people watching that purple line, which you now know is the 50-period moving average. And because the prices blow it, they're going to be looking at that as an area of resistance. You're also going to have a bunch of people watching that pink line, which you now know is the 200-period moving average. And they're going to be watching that area as a level of support. But if you want to just use these moving averages as trend lines, basically you can draw in. So we'll use that as a trend line, and we'll use that as a trend line. You can see that we basically have a wedge pattern here headed into next week, which brings up the question, who is ultimately going to win out? Are the bears going to win out and push to the downside, or are the bulls going to win with the break to the upside? That's the big question headed into next week. So that wraps up the top 10 list. Again, if you like what you saw here, then definitely go get signed up for that free training. It'll be next week, Thursday, September 14th at 7 p.m. Eastern time. So I hope to see you there. As far as these top 10 videos are concerned, if you enjoy these, please do two things for me. You've been doing fantastic as subscribers and viewers. So thank you so much. Hit that like button, leave a comment. It helps the algorithm. And as long as I know people are enjoying and these get more and more views, then I will continue to put in the required time and effort to get this content out to you. So hit that like button, leave a comment, even if it's just saying hi, tell me what you traded today, give me your watch list for next week. But those things really help out. And then again, like I said, go get signed up for that free training. So take care. Have a good weekend. Hit that like button. Leave a comment.